Well, let's talk about the use of funds. That's really way more important than the cost of funds, and I'll show you why in a minute. Um, the one issue that I can tell you really hurts businesses, and that's not being able to get their hands on working capital. And you can say what you want, but it is not easy. It's not simple. You can't go to the bank and get it. Friends and family are not really an option in most cases. And most of the small business people have some bruised or bang up credit because they have put their name on everything, not because they don't pay the bills, because they always do, because they are entrepreneurs. But if a person that you talk to, a small business person, has a legitimate reason for needing funds, and they got a good use of those funds, then the cost of funds really isn't that big of a factor. And I'm gonna go over just a few that we some offers we put out there. This is a women's boutique, and they need inventory. I've talked to them. They've averaged about 110,000 over the last 3 months. They haven't been in business for 2 years. That's kind of a an issue. Oh, well, I think it's like 25 months they've been in business, but they really, revenues up and down and all around. But I was able to get them a $135,000 offer over 18 months at a 143 rate weekly. So when you look at that rate, that cost of funds, if you wanted to figure out what this annually is, it's over 18 months. So you divide that 0.43 by 18 and then multiply it by 12. So they're going to pay about 28.6% for the money on a non-collateralized signature funding. And on this particular offer, they got a prepayment discount of 25% no matter when they pay it off. This particular lender right here has added on that in 6 months, 9 months, whenever they want additional funding, if they want to renew it, then they'll take the cost of those cost of funds that they're charging for the remainder of the balance, they'll waive it. So there's a lot of little nuances in this particular offer that is great, but their need for inventory for this particular group, and it's a retail establishment, so they can really put a lot of cost of funds into the sell of the product. On top of that, as you know, the cost of funds is in most cases tax deductible, but ask them to talk to their CPA and in their particular state, see what they can do. Another one was a daycare center, and they needed playground equipment. And they're averaging about $20,000 a month. Uh, for whatever reason, is down from what it was last year. It's way down, but they're doing about 20,000. I was able to give them a $25,000 offer over 8 months at a 141 rate. Now you look at that 141 rate and you say, man, that's a little bit high. Well, the cost of funds are a lot higher right now in our economy and the way things are. The risk is high. People may not pay. They may go out of business, that sort of thing. But a 141 rate is not a bad rate. And what the person looks at, the client is, man, what am I going to do with this? What will this new playground equipment do for me if I can put another dozen kids in my daycare for the week?